the output cut, the crude oil output cut that Russia has announced. Bear in mind, India has been the top customer for Russian oil ever since the Russia-Ukraine war began. And Russia, to make sure, already Russia is selling crude oil at a discounted price to India and China as well. And now Russia wants to maintain the prices of its crude oil barrels, and hence it has announced a 500,000 barrels per day output cut. 500,000 barrels per day lesser is the amount of Russian crude oil that will be put out. And bear in mind, this comes on the back of Saudi Arabia announcing a 1 million barrels per day output cut to keep prices steady. But bear in mind, all of this output cut will affect India because at this point in time, India is the biggest consumer, biggest customer for Russian oil along with China. Talk to us, Kartik. How do you see the situation panning out going forward?
So, Krishna, I believe we were too bullish and too optimistic on Russian oil prices, saying stable for us,
yes,
for the long term. And there were doubts on that momentum to continue, specifically because not just Saudi Arabia, the entire OPEC Plus region had announced significant cuts, $1 million barrels per day cut in its oil production and not just oil exports. So the idea there was that because of two major oil guzzlers, China and India, wanting to import from Russia instead of the OPEC bloc. Not that we completely discontinued importing from the Gulf, but because we preferred Russia over the OPEC Plus bloc as our oil import preference, we, the folks there realized that that prices eventually will have to be stabilized. Now, how do prices stabilize? Prices for them will stabilize if the demand and supply equilibrium is met at an optimum price value for the oil exporters.
Correct.
And that was not the case because our purchases had declined from that block significantly because we were banking too much on Russian oil. Now, this, of course, did great for India. Let me give you some numbers. For example, Indian refineries have been able to save as much as $7 billion in the last 14 months, ever since the Russia-Ukraine war broke out. And we began to circumvent the sanctions on Russia and find our ways and means to import, using the sea routes, our oil, not just for domestic consumption, but even for export back into US. Overall, in this trade on oil, Indian refineries were able to save up to $7 billion. Now, this, of course, this saving would have contributed to profitability, would have contributed to operational growth and overall, functional improvements in those refineries. Now, Russia has realized that it will have to follow suit because globally, oil prices will have to meet some sort of a semblance of balance. And that has resulted in Russia now announcing a 500 million barrels per day cut. 500,000 barrels per day cut. And this obviously is not good news for India. Now, what is also happening parallelly is that India has finally begun to settle trade with Russia, specifically for Russian oil, in yuan. Instead of dollars, which are of no value, they are physical paper sheets for Russia because of the sanctions. But we are not settling, we haven't yet been able to impress upon settling these trade bills in the Indian rupee.
Right. And
we keep talking about de-dollarization and we keep talking about strengthening the Indian rupee, making it more accepted across the world for global trade. That hasn't really happened, despite India being the largest importer of Russian oil. So we have started settling those trade bills in yuan, which is great for China, not so much for India. So overall, with OPEC cutting oil production, now Russia following suit, cutting oil production, both blocks which are real repositories of oil wanting to stabilize prices in their favor is not going to be good news for India.
So, to put it simply, to put it mildly, the days of cheap oil are over.
Pretty
because,
much.
Like the prices at which we bought oil, crude oil over the last 14 months, because of all the geopolitical tension surrounding oil with the Russia-Ukraine war, Russia wants to badly sell oil because the entire world has put sanctions on it. So Russia is willing to give it at a discounted price, and to make sure at least it gets off its stockpiles, so to speak, with the entire world.
Right. That's
so
right.
That price at which we bought
is not going to stay anymore.
Is not going to stay anymore, which basically means the fundamental raw material for the oil, all the oil that we use, petrol, diesel, or the raw material for crude oil, those prices are going to go up. We'll have to wait and watch how it affects you and me.
But that might not really happen immediately. Remember, we are in a run-up to general elections. Inflation is something that we are already battling tooth and nail. RBI has been trying to hammer it down to 4%. It hasn't yet receded to those levels. So there might not be an immediate direct impact on domestic fuel prices in India, but it's going to shift the equation when we talk about our balance of payments, when we talk about our import, export and the current account deficit. All of those macro numbers are likely to get impacted also because the oil that we import from Russia, which gets refined here in India, especially in the Reliance refineries, RIL refineries in Gujarat, get exported to European markets for which we get euros or USD back. So overall, this entire balance of payment, forex, current account deficit, import-export deficit, all of that is going to come into play if oil prices stabilize for the oil producers but become unstable for the oil importers like us.
Right. So it will have an impact on some of the crucial key macroeconomic indicators like balance of payments and etc. etc. You and I might not have to pay more for our fuel bills immediately. That's the message coming in. So when you read this story about Russia cutting its crude oil output, or what it will understand the fact that it might not impact you, the consumer, directly, immediately, but it will have its consequences and it will have its reverberations on the macroeconomic picture of India. And we'll have to wait and watch how this eventually impacts us as a consumer.